So picture this. Bitcoin and Ethereum are just smashing through their all-time highs. The market feels unstoppable. And then, bam, a sudden, brutal crash. In just a couple of days, prices just plummet, wiping out gains and sparking fear pretty much everywhere. It leaves everyone asking the same thing. What just happened? And, more importantly, what's coming next?
And that really is the multi-trillion-dollar question, isn't it? Is this it? Are we watching the final peak before a long, painful bear market? Or is this just a really violent shakeout designed to scare everybody out before the next massive leg up? The experts are completely split, and in this breakdown, we're going to dig into both sides of this incredibly high-stakes debate.
All right, let's dive into the scary stuff first, the bear case. For the folks sounding the alarm, this recent crash wasn't just a dip. Oh no, they're seeing a bunch of major red flags, starting with some really serious technical damage on the charts. See, for analysts like Trader Chang, this is a huge deal. It isn't just random market noise, it's a structural break. For weeks, it felt like the market had this solid floor, a line in the sand that the bulls absolutely had to hold. But in this last crash, well, that floor didn't just bend, it completely shattered. And that number right there, $111,900. According to the bears, that was it. That was the last line of defense for Bitcoin. And when it broke, it wasn't just a minor blip. It was a massive signal that the sellers were taking control, opening the door for a much, much deeper slide. And it's not just one thing. Sources like 的漂亮的 K 线日记 are pointing to a whole cocktail of classic textbook-topping patterns. We're talking about things like a rising wedge breakdown, a potential M-top or double top, and maybe the most worrying sign of all, the selling is happening on huge volume. That tells the bears that the big money isn't buying this dip. They're the ones doing the selling. So you can see how for the bearish camp, the picture is pretty clear, right? Key support levels are gone, classic topping patterns are showing up, and the market's whole vibe has shifted. The psychology has totally flipped from buy the dip to sell the rip, and that's how a strong uptrend starts to turn into a long-term downtrend. But hold on, that's only half the story. Let's switch gears and look at the other side of this coin. Because the bulls, they're looking at the exact same charts, the same data, and they're seeing something completely different. For them, this isn't the end. It's a reset, a necessary cleansing.
B. Trendarn B. Chen makes a really powerful point here. You can't use old maps to explore new worlds. He's basically arguing that the old rules of crypto just don't apply anymore. Past bull markets, they were all about retail hype and these predictable 4-year cycles. But this time, it's a whole different ballgame. The market is driven by huge institutional ETFs, and they just don't play by the same rules. They move slower and accumulate over longer periods.
In this chart, this pretty much says it all for the bull case. So while a lot of smaller investors are understandably panicking and selling, what's the so-called smart money doing? The data from the ETFs shows that during this price drop, they are buying. Net inflows are still strong. The bulls say this isn't distribution at all. It's institutions using the market's fear as a massive buying opportunity. This quote from analyst Yufu Liao Bi just hits the nail on the head for the bulls' mindset. They see this violent drop not as a sign of weakness, but as a deliberate and, frankly, necessary washout. So, what's the goal? To scare the living daylights out of all the nervous, over-leveraged traders and get their coins into the hands of long-term holders, right before the next big move up. And that's why the bulls are basically yelling, hey, stop looking at the 5-minute chart. Zoom out. From a longer-term view, they argue the picture is still incredibly clear. Those key moving averages, the big indicators that really define the major trend, are still pointing firmly up. And as long as that larger structure is intact, they say the bull market is very much alive and well. So here we are, two powerful, totally opposite stories. The bears see a classic technical breakdown. The bulls see a classic institutional shakeout. And with the market sitting at this critical crossroads, everyone, bull and bear, is staring at the same few price levels. These are the lines that could prove one side right and the other very, very wrong. And this is it. This is the battleground. Kua blockchain Coco calls this narrow price range the neutral ground, the no man's land, where the war between the bulls and bears is being fought right now. A big, decisive move out of this zone could set the tone for weeks, maybe even months to come. This table really lays out what's at stake.
For Bitcoin, if the bears win and we break below 110K, their next big target is that massive psychological level of 100K. But the bulls are saying, nope, even a dip to 105K is our final support, our prime buying opportunity. Same story for Ethereum. A break below $4,000 and the bears are looking towards $3,000. But the bulls are looking at the $4,100 to $4,200 zone as the place to load up. These are the lines in the sand.
So, okay, we've heard from both sides. We've got compelling arguments for a crash and compelling arguments for a moonshot. What in the world do you do with all that? How do you navigate a market where the experts are seeing completely different realities in the exact same data?
Well, it really boils down to which of these two stories you find more convincing. Is this just the same old story we've seen before, a classic market top playing out by the textbook where caution is key? Or is this something new? A different kind of market where the big institutions are changing the rules of the game, and this is just a shakeout before the real fun begins. And, this really gets to the heart of it. There isn't one single right answer that fits everybody. If you're a long-term spot holder who really believes in that institutional thesis, you probably see this price drop as a gift. But if you're a short-term trader using leverage, ignoring these bearish technical warnings could be absolutely catastrophic. Your strategy has to line up with your own views and your own tolerance for risk. So what happens when the experts are this divided? Well, ultimately, it comes down to you. The real question you have to ask yourself isn't just who's right today. It's about which game you think we're playing. Are the old rules of crypto still in effect? Or is a brand new game with brand new players and a whole new logic just getting started? Your answer to that is what will probably define your strategy from here on out.